Hi, this is Mike Larson for Money and Markets TV. Almost a year ago, Weiss Ratings challenged the major credit rating agencies to downgrade the long-term sovereign debt of the United States. At the time, Martin D. Weiss, the chairman of Weiss Ratings, wrote this: "The U.S. government's AAA rating is an anachronism. Given the rapid deterioration in our nation's finances and the spreading threat to sovereign debt overseas, a downgrade is long overdue. By reaffirming the government's AAA rating, the ratings agencies give policymakers a green light to perpetuate their fiscal follies, further degrading our government's ability to meet future obligations. And they help create a false sense of security overall." He argued that a downgrade would actually help protect investors and prod Washington to fix its finances before it was too late. And Martin's not alone. I've also been sounding serious warnings on the U.S. debt and deficit situation for months on end. And now it appears the rating agencies are finally starting to get the message. Earlier this week, Standard & Poor's warned that the U.S.'s AAA credit rating is at risk. It's the first time since the agency's founding in 1941 that the outlook for the country has been anything but stable. S&P said that the U.S. has, quote, "very large budget deficits and rising government indebtedness, and the path to addressing these is not clear." More than 2 years after the beginning of the recent crisis, U.S. policymakers have still not agreed on a strategy to reverse recent fiscal deterioration or address longer-term fiscal pressures. Folks, what this all means is that there's at least a 1 in 3 chance the U.S. will lose its AAA rating between now and 2013. And if I'm right, the other rating agencies are going to follow S&P's lead. Unfortunately, that'll mean nothing if we don't get off this dangerous path of fiscal irresponsibility. If Republicans and Democrats in Congress and the Obama administration don't restore sanity, and if the Federal Reserve doesn't put a halt to its disastrous monetary policy, it could cause major upheavals in the fixed income, currency, and stock markets. Specifically, the purchasing power of your dollars will collapse. Precious metals will explode in value. The price of key commodities like crude oil, cotton, copper, and cattle will surge even further. Plus, the cost of borrowing will soar as bond yields shoot higher. And eventually, stocks will implode because all the money printing in the world can't compensate for the real economic fallout of these events forever. That turmoil is likely going to have serious consequences for your portfolio. So folks, there's no time to waste. You have to start preparing now. In my Safe Money Report and video on the American apocalypse of 2011-2012, we'll show you how. I'm Mike Larson for Money and Markets TV. See you next week.